My friends, what is going on? Hope you had a wonderful week. Hope you had an even better weekend. Today is Sunday, so it is time for your AMC Weekly Outlook video that I put out every single Sunday. Before we jump into the video, you guys know the deal. Nothing I'm giving you is financial advice. Everything I'm giving you is for educational purposes, so you can make the best decisions for yourself and for your family and your portfolio. All right? Let's jump into the video. Also, too, if this video is helpful to you, please like, subscribe, comment, all that good stuff. If you also haven't done so already, please follow me on Twitter, Colin_Gladman. Easiest way to keep up with everything that I think is going on, intraday thoughts, if I see important news, anything along those lines, that's where you can find me is on Twitter. So, we're going to go over option chain. We're going to talk about GME's chart. We're going to talk about AMC's chart. We're going to take a look at my cycle chart, take a brief look at the overall market. The AMC Weekly Outlook videos that I do, guys, are always going to be a little bit longer. And you guys also know, if you've been following me for any amount of time, that I don't, even though people call me a YouTuber and everything like that, I don't make videos just to make videos. I'm only going to make a video if I think there's something important to say. So what I'm planning on is obviously the weekly outlook video right now, and then I plan on a video probably pre-earnings as far as what I'm going to be looking for, and then I'll do a video post-earnings talking about my thoughts as far as how all of that goes down. So that'll probably be the plan for this week, unless obviously anything crazy happens. Also, before we jump into any of the charts, I want to talk about what I tweeted out real quick about Adam Aaron coming out, and I've just seen a lot of people talk about how they're saying right here. So I said, I keep seeing people saying August 4th is a pounce. That is not what CEO Adam Aaron has said. He said there will be a pounce. He does keep his word. It won't happen before Q2 earnings. Not on. I'm looking forward to the earnings report. I think it's going to be one of AMC's best earnings reports in a very long time. I'm also going to be looking forward to any guidance that they're going to give about as far as like the credit card. The AMC branded credit card, be looking for expansion of the popcorn business when that is going to be rolling out, all that kind of stuff, but we'll talk about that more in the earnings video. But I think people are getting way too hyped up thinking that this is going to be the pounce on August 4th, and I don't believe that that's going to be the case at all. I think the pounce is going to an extent, come out of nowhere. He might drop some hints about it. I do think that the way he's hyping this pounce up, that it really needs to matter. It needs to be important. It needs to be something big. Not like everybody who's an AMC, stock member gets a free icy or anything along those lines. I think it needs to be something important and big. I'm counting on it to be big. As far as I'm concerned, Adam Aaron has always kept his word. He's always done exactly what he said he was going to do, including selling his shares that everybody got so mad about. He said exactly how it was going to happen, when it was going to happen. So if you had a big problem with the way it was going to happen, you could have gotten out too. But you didn't. Instead, you want to be mad. So, and I didn't either. Okay? Because I didn't have a problem with it, because he told me it was going to happen. But it is what it is. Moving on. So, be excited for the earnings. I think they're going to be great numbers. I think we're going to hear about how many people are coming back to theaters. I think the concession numbers are going to be amazing. Once again, looking forward to forward guidance on some things, but I wouldn't act like August 4th is going to trigger a squeeze. So let's look at things that potentially could do that. The option chain. So option chain going into this week looks pretty good for the call side. There is going to be at 15. There's already 7,000 contracts at the 15 level. So it looks good. I mean, definitely way more calls than there are puts. If AMC really gets running, it looks like pretty much up to $18. There's going to be a lot of contracts that are going to need to be hedged for. Now, obviously this changes all the time. Another thing, my friends, be careful about buying calls, going up into earnings. Please make sure that you understand what implied volatility is and what IV crush can do to those contracts. Even if you pick the correct direction, you can still wind up losing money due to elevated IV. I made a video all about this in detail for my Discord, but in short, AMC is always going to have a higher implied volatility just due to its nature being a meme stock and everything along those lines, but it is going to get elevated going into earnings. So if you buy calls going into earnings, you've got to be very, very, very careful. Otherwise, you're going to wind up losing money on that deal. So I want you guys to be safe and be careful. So like I said, make sure you understand IV before buying calls this week going into earnings. Let's take a look at some charts here. So let's look at GME first. So GME, I tweeted about this, is in this little bear flag that it's got going on right here, okay? I tweeted out, I thought, we'll zoom in a little bit closer here. Right here on Friday is where I thought we were going to get a breakdown of it. So you had basically your 9 and your 21, your 13 and your 48 EMA crossing down. You had this massive red candle right here at the bottom. So I was anticipating a push down, a retest, and another push down. And instead, thankfully, it recovered. Okay, but it's still inside this channel that it's traveling on. So like I also tweeted out, really all I think we're doing is delaying the inevitable for GME. And honestly, the thing that I don't like about that is obviously AMC and GME run hand in hand. So basically a path that, it kind of keeps bouncing around this channel. And then one time it's going to get a weak bounce, probably a break, push back up, and then a fall down. So GME also pretty much has some very clearly defined supply and demand areas. So pretty much up here in this red rectangle, is going to be its supply area. And then down here in the green rectangle is going to be where it is picking up demand, where buyers are stepping in. So it could, just push all the way back up. This big red trend line right here is going to be, I'll go to the daily real quick just to show you, but is going to be its all-time high. So this is going to be the pennant, if you will, that I've got GME tracking in, have been for a long time. So it could even make its way all the way back up to, testing that before it decides to come all the way back down. GME's got some gaps down here and the $29 level. And so I would be surprised if those don't get filled before pushing back up to testing the bear trend line. Once it gets over that line, then we can start talking about, potential new all-time high numbers. But until then, it is definitely still overall, massive, mega macro picture, if you will. The bears are going to be in full control on this. And you guys know what I'm talking about. Like I said, the big picture, okay? Obviously, there's going to be ups, there's going to be downs, but until it gets over that trend, then bears are going to be the ones who are looking. And, at those gap levels is pretty much going to be the 618 fib retracement. So makes a lot of sense to me to come down here and fill these gaps. And that doesn't bode well for AMC. Obviously, there's days where they run, slightly in, different directions, but, for the most part, as far as I'm concerned, these stocks walk hand in hand. So even if GME, if it pushes up here and it kind of makes, one of these right here where it could potentially be making kind of like a head and shoulders formation. So those are going to be the things that I'm looking for GME. Obviously depends a little bit what the overall market is doing. The overall market was just ripping and roaring last week. Also too, the overall market is still drastically though, underperforming what AMC and GME have been doing. Both AMC and GME have been outperforming the overall market, especially on some really red days. So the fact that the overall market is catching up and GME and AMC are not, completely ripping is not surprising to me at all. Everybody's real happy when they outperform on red days, but when they underperform on green days, then all of a sudden it's manipulation and not fair. You know what else ain't fair? Life's not fair. So get over it, okay? I think SPY is going to have some trouble here. I tweeted out about this, about how it basically ripped through these volume gaps right here where there's very low liquidity, so it was easily able to push up to that. But right now from the tumble, essentially, and let me go back to that. So, yeah, right here. So from where SPY, the overall market, had its all-time highs, it's pushing up through here nicely, but I think that we are going to be, if you look at this once again from a supply and demand standpoint, then this potentially could be SPY's new supply zone, and this potentially is going to be its demand zone. So when you got those supply and demand zones and they're bouncing around between those are pretty much going to be like Wyckoff accumulation schematics till it's ready to push up the markup and then create new. So whether it's the overall market, whether it's AMC, whether it's GME, they're pretty much all going to be in constant, accumulation and distribution patterns. Now, when we go over here and we look at AMC directly, first things first, on the daily candle, the nice thing about this big, retrace right here is the volume has been insanely low. I think I saw Rico talk about, Friday's volume was only 18 million shares traded. I don't even remember the last time. It was something like that. Once again, I think I saw Rico say that it was like back over here in November. Thought I said. Yeah. So November 24th, 18.2. So, and then obviously we had massive distribution after that, massive downside after that. So hopefully, because we've already had massive downside, we can start, looking at, getting some good pushes up. But from a daily standpoint, I'm really looking for, this macro trend to hold. Worst case scenario, around that, let's just call it 13 to 1350, in that range. People keep asking me why I keep harping on 1467, how we need to be over that. And I keep talking about how I want to be, north of 1468. And it's just because it's such a key level for AMC, historically has been, was the resistance back here before the massive June run. You can just see, let me just zoom all the way out and show you guys why I think it's so very important. So back here, where you could argue this is really where shorts, started stepping in, and however you want to look at it, whether it's through naked shorts or anything along those lines, this is where shorts started getting involved in AMC heavily. And this 1467 has pretty much been a line that AMC has kind of ribboned around, and then right here, it started acting as resistance, then acted as support, then gapped down again. So let's see here, from August of 17 until May of 19. So for basically almost 2 years straight, AMC was using that 1467 as a magnet range, if you will. And then, like I said, after the January pop, then it was super important before the June run. It was massive support right here before the March run, and now it's been massive resistance for us. So we need to be over this, 1467 level. That is why it's so important. So no, 1450 is not good enough. No, 1460 is not good enough. No, after hours is not good enough. I want to see some good solid closes over 1467, so then we can start talking about being on the northern side of this line. The candle that we got on Friday, pretty much a 50-50 neutral candle. Some good examples right here. These with relatively equal wicks. Right here, massive push down. Right here, massive push up. So doesn't tell you too much. A push into earnings to me is what makes the most sense, mainly because last earnings we pretty much knew what was going to happen, going into it. Adam Aaron already said it wasn't going to be, great earnings, just due to the fact that quarter one is always notoriously a slow quarter for the movie theater business. And then the earnings before that, where we knew that they were going to be good. So let's just take a look at both those. So we also dumped. No, I'm sorry. We pretty much stayed range bound before that one. But that was the one that we knew going into it, how good of a fourth quarter, because AMC had already pre-released a lot of data. So, yeah, we stayed range bound after that and then dumped afterwards and then had the big run. And that is typically, what happens after AMC earnings is we get a dump. So after the November earnings, we got a dump. Back here, that's when we got the big push up, those May earnings, and then here, historically, little flat, then a nice big push up. So I would like to see a little bit of a run into earnings and then a pullback, or even range bound into earnings, kind of like I've talked about, kind of making that rounded out shape, start going up into earnings, and then a nice good solid push after that, that we can start moving up here and testing some very important levels. Last but not least, let's look at the cycle chart. So if you've been following me for any amount of time, this is the chart that I have been using to track AMC's accumulation into potentially what could be the next leg up. The first time I started talking about this chart was back on March. I don't remember. It was mid-March was the first time I started posting this, and so it's given me very reliable levels for AMC for a while now. When everybody was talking squeeze right here, I'm pretty sure I was the first, if not only person to say, no, it's going to tumble all the way back down. Everybody was big mad about it, and here we are, because this is what I was looking to play out right here. And it's looking good so far. We've got key levels that, once again, I want to get over. Now, I wish that back here last week we would have kind of pushed up just a little bit higher, just a few cents higher. We got up to 18.34. I wish it would have gone up here till about 18.68 or so. And so that's when you go, okay, 30 cents. Does that really matter that much? And the answer is I don't know. I don't think so. I certainly hope not, but at the same time, I don't know. So now what we want to see is just like once we started the upside, we followed this trend pretty much all the way up till we got the push up to what I've always called the launch pad. So I'm just looking for that to continue. I'm looking for this yellow trend line to hold and just kind of constantly making these J shapes. This was the shape that I drew for last Sunday's video, so you can see that rounding out motion. So I would like to see that motion, continue this week. So pushing up, well, let's see here. So even so that'd be 16 this week at most as far as curling up goes, if we're within the same ballpark of where I think that we are. My most bullish case scenario would be that push up to let's see here. Most bullish case scenario would be the push up to 22, but I think 20, somewhere close to 20 would be my most bullish case scenario for this week. I would be surprised if that happens, but believe you me, I will take it. Okay. The biggest thing that I've talked about when it comes to this accumulation pattern is just going to be, even though, the shapes are going to be playing out, the levels are going to be different, the time is going to be different, and nothing is going to be one for one. That's what I try to stress the most. So, but that's overall going to be what I'm looking for. I think most likely would be a push to around 16. Most bullish would be, coming up here to around 20. But I think no matter what, we've still got some pushes up, rejection, pushes up, rejections, pushes up, rejections. Once we get, like I said, once we get, pretty close up here to this $22 range, then we can start getting real excited, I think, for, what's to come over the next few months. Another thing that you can look at too is if, always do that every week. But, there's a lot of similarities in AMC's, accumulation patterns that leads into runs. So I was just looking at this. If you essentially look at this right here as, kind of this M top. So essentially this right here, this M top that then spills all the way down, Then you got a big run that comes back up. Then you got a big run that comes back up. And then it spills all the way down even deeper. And then it starts its accumulation pattern. And then boom. And then maybe boom. Right? That's what we would like to see, right? So there's a lot of things playing out. Real nice that I'm very hopeful. Once again, I wouldn't be in this play. I personally don't believe that AMC has seen its all-time highs yet. I wouldn't be in this play and wasting my time and money making videos or wasting my time in my investment portfolio in it if I thought that there wasn't still a whole lot of upside left for AMC. So when it's going to happen, I don't know. How it's going to happen, I don't know. But what I really like about AMC is how much they're talking about how not only is the company improving, it's improving pre-pandemic, not just, like I said, they're not just, out here touting Joe Biden job numbers where it's like, okay, yeah, we're going to talk about how awesome it is even though the entire country was shut down. They're actually doing better than before the pandemic. And I think their brand is only growing. It's only going to stay, constantly getting attention and everything like that as long as it's a stock that is loved by retail. So a lot of good things to look for. Overall, would love to see 16 this week. Would really love to see, a 20 level this week. We're going to need to hit some more key levels before more positive about where potentially we could be in the cycle. But essentially what I'm looking for is, like I said, is this move enough right here, enough of the test that then we come down here and then we break through before we come up here and start moving towards 22? I just don't know. I don't. I'll tell you if I did. Okay. What I'm looking at here is this. Where's my little drawer? This move right here, this kind of little waterfall over. Set this little waterfall over right here. And then this, big push up with the steep decline that led into another, is that this big push up that leads into this steep decline before we get our next, big push up to around that $20 range? I don't know. I mean, the more I've looked at this, the more I feel like we are kind of right in here. Okay, that's where I think we are in this overall pattern. So we've definitely got some levels to get through. We definitely got some time to wait it out, if you will. So keep buying and holding if that's your thing. Keep buying and trading if that's your thing. Keep shorting if that's your thing. I really don't care what your thing is. I want you to trade your plan. But these are going to be the key levels that I'm looking for as far as what I think potentially could be coming next. All right. So once again, if this video is helpful to you, please like and subscribe. Leave me a comment. Let me know what you're thinking. And we'll just take it one day, one level at a time. Okay. Everybody keeps asking me, is it going to happen this year? Is it going to happen? What's it going to be a month from now? Should I buy these leaps or anything like that? And the answer is I take everything one day, one level at a time. I play the chart that is in front of me, and literally every second the market is open, it changes. So I try not to overcommit to anything, because the reality is I just don't know. The more and more the chart plays out, the more and more the picture is going to paint for me. I do believe I will know when things are going to start getting really fun. But this level of low volume is going to be great for, I would imagine the Bollinger Bands are starting to get pretty tight again. Yep. So, like I said, a lot of really good potential things that can happen for AMC, but we need to get over this 1467 level, so that way we can start looking at bluer skies above us. I'll just put it that way. All right, my friends, I hope you had a wonderful weekend. I hope you have a wonderful week that is going to be coming up. Trade your plan, trade smart, have a plan before you enter a trade, not after you enter a trade. Be careful about implied volatility this week on not just AMC, but any stock that you could potentially be looking at playing with earnings reports rolling out. You guys have a good one. I will see you on the YouTube verse, the Twitter verse, all that good stuff. Have a good one, guys.